Well, the previous word from the Federal Reserve was that interest rates in the US would be kept at 0 to 0.25% until the middle of next year. Last night they upped that by another 18 months to the end of 2014. That pushed yields on US government debt down even further and made Australian interest rates look even more attractive to global investors, shoving the Aussie dollar through 106 US cents. The big game for global funds at the moment is to borrow in euros at 1% and put the money to work at double that rate or more in a currency that's actually going up, unlike the euro. In Australia, you can get AAA government bonds at 3.8% yield and a rising currency. Easy work. The US share market was actually a bit weaker today after strong gains in Europe, and Asian markets were patchy this afternoon, all of which left the Australian market up about 0.5%. This time it wasn't the banks leading the way, but Rio Tinto, after securing control of a big copper gold deposit in Mongolia. Shares in ResMed, the sleep apnea business, woke up with a start, despite a weak profit result because management predicted better things in future. And the two steelmakers were melted down, presumably because of the strong currency. The Dow Jones Industrial Average in New York is now once again back to where it was at the start of 2008, before all hell broke loose that year. The Australian All Ordinaries Index, however, is still down 32%. Now, I think there are two reasons for that. First, the currency effect. In currency-adjusted terms, it's down 18%. And second, our market is dominated by banks, which haven't been too popular. Finally, commodities were well bid last night. Gold in London was up 4.7%, but less in New York, and base metals saw some big gains as well. And that's finance.